just want to talk about using the VTA. All right, and we'll talk about. Yesterday we talked about the trend trade, the manual trade, and the global trade settings and stuff. Today we'll talk a little bit about using the VTA for a trend trade. All right, so you can make your panel however you want. Sometimes it opens small. You might want to keep it kind of large because you got so much stuff on it. Now let's go to the trend trade settings. Now, if you notice, there's 1 minute trend trade and there's advanced settings. Okay. Now if you scroll down, you'll see 5-minute trend advanced settings, 15-minute trend advanced settings, and that's where it stops. Is there a 60-minute trend? I mean, yeah, sort of. I mean, you're not really scalping anymore if you're on a 60-minute trend. You're straight up swing trading. That's fine. You can definitely, the thing about swing trading, these grids are really excellent for swing trading because you can pinpoint your entries with this. So it is cool for that. But we do have trades that trade off the 60-minute box, the bounce, and this things like that. So we don't have a 60-minute trend on here, and plus to do a 60-minute trend, you have to kind of keep track of 240 and daily stuff, which the VTA does, by the way. Let's start with the 1-minute trend. You'll see a lot of these entry mode. Okay, now this is different than the other setups. This is the only setup that has an entry mode. And honestly, it's only the 1-minute trend trade because there's two types of 1-minute trend trades, we call them. We call it the box entry, which is just entering right at the edge. We also have a white zone entry, so we call it the 1-minute white zone trade, which is all it is. It's the same. Everything's exactly the same, except instead of entering at the 1-minute box, you enter at the white zone. You'll see the white zone is a very good level of support and resistance as well. So a white zone is it's a little more conservative of an entry. You don't have to jump out or way out onto the outskirts of the trade. You can actually get a fast-moving trade that has pulled back somewhat to the white zone. So you can decide what kind of trades you like. You can do a white zone entry or a box entry. Okay. So if you change that, then you're not going to get an alert here. You'll get the alert when the price hits the white zone, not when it hits the 1-minute box. I think a lot of people prefer the white zone entry. I'm not going to lie to you. You get a lot better entry. If the market's moving though, sometimes you won't even get the white zone entry, and still it is a 1-minute trade. So you got to expect it to pull. Even white zone entries will often pull back to 5 or 15-minute levels. The truth is, most people, once they get into the grids, they realize the 1-minute trend, while that's the trade that gets most people involved, but once you start trading the grids, you'll see that there's a lot higher probability setups. You probably won't trade the 1-minute trend too much, but as a general rule, you guys will probably, and I suggest we stay away from the 1-minute trends. You probably won't see me take too many 1-minute trends in the trade room unless it's early in the session. We have a lot of time for the trade to work out, and the grid has to be perfect, and it has to have sidecars that are also perfect. Okay, so everything has to be perfect for me to take a 1-minute trend trade, especially on the room, because they are a little bit lower probability, but when they work fast, they work quick, and they work out for some good pips. That's your choice on your entry type. Then you've got same thing, dynamic entry or one-click entry. Now for the 1-minute trend, you don't have a choice to choose what candle time frame you're going to use for a dynamic entry. It's a 1-minute trend. You're not going to use a 5-minute candle or a 15-minute candle. That'd defeat the purpose. So if you do dynamic entry on a 1-minute trend, it's always going to be a 1-minute candle close that it's waiting for. Okay, you don't have the choice in that. You don't really need the choice on that one. This is again on all the setups. Your stop and your target are your hard stops and hard targets. You can consider them your emergency stop and your emergency targets. So any of the dynamic stops and targets that will operate within those levels. If there's a dynamic target, say for example in this case, that's beyond 20 pips, then it won't hit that target. It'll take you out at your emergency target at 20 pips. And if you have a stop that's sitting at minus 20, that stop's never going to get tested, because if it goes minus 15, your emergency stop is going to take you out. So these are the absolute most, and you can win or lose is what you put in this box right here on a trade. Sometimes you could put it 100 pips and 100 pips and just let the dynamic levels do their thing, and that's it. There's nothing wrong with that. Okay. it's just if you use like an L7 stop, your stops are going to be large on a 1 minute trend. For example, look at this dollar yen. If you entered right here, look where that 1 minute L7 is. You're 30 pips lower at least. So if you put 100 here and you put an L7 stop, you're probably going to have about a 30 pip stop. Now, the longer the trade stays there, actually your stop will actually tighten because all the levels converge towards the price. You have to find your trading style. The grids, it's another thing to mention here is the grids are not a black box trading system. Okay, they're just not. You have to learn how to trade still, but it's a way to view the market. It's a window into the market that you don't get with traditional charts. The regular charts, you look at one time frame. Here you're looking at multiple time frames on one window, and now we can build strategies on that, just like strategies have been built on charts. Anybody, as a quick show of hands, can tell me how many exactly? I want the exact number of trading strategies that have been built on charts. I mean, by everybody, by anybody, by you, by the next guy. Can anyone tell me? Probably not. Millions, bajillions. I mean, everybody and their brother's got 10 strategies, and guess what? They've built them on charts. Our dynamic stop, these are cool. So, and this 1 minute, this dollar yen is going to show us exactly. So, you see how the lines L1, L2, L3, L4, L5. Actually, guys, by the way, it jumps from 5 to 7. Sorry, I didn't put the 6 in there. Honestly, it's a good line, but it does tend to jumble it up a little bit. And the 5 is so good and the 7 is so good that I haven't even noticed not having it. But I could always put the 6 back in there. But either way, if you notice the options, you don't have the L6 option anyway. So you can do an L3, which is the pink line, as a stop. You can do L4, L5, L7. Okay. And so if you use one of these lines as a stop, then it's in effect kind of a trailing stop, and a slow trailing stop. It's always going to move up as long as your trend's working for you. So it's a dynamic stop. It's a stop that keeps changing. It moves up with you. It's not as tight as a trailing stop to take you out early, but it's going to move up with the trade. But you also leave yourself open for very big trade. If you use one of these lines, sometimes an L7, it'll go 3, 4, 5, 600 pips even before it touches an L7 again. You never know. But how many of those will work out for really big tips, and how many will you be taking some pretty substantial hits on? So, any of these are pretty good. I like the L3 as well as a stop. It's a little tighter. Sometimes it takes you out a little early. It's not bad. You can also use a white zone. So if this is a 1 minute trend, it's going to use the 1 minute white zone. It'll tell you what white zone is going to use. If it doesn't tell you a time, it's the same time frame, so it'll use a white zone. You can also use a 5 minute box as a stop. So if you enter a 1 minute trade here, and you can say, look, I just want to break it if it breaks below the 5 minute box. If the 5 minute box can't push it up, I don't want any part of it. So you can use a 5 minute box as a stop. So these are what these dynamic stops do for you. Okay, you can use the swing stop as long as you're not using one-click trading. If you're using the dynamic trading, you can use a swing stop. Okay, and then the group stop I'm actually going to get rid of. That was something I was using before. So in fact, just don't even worry about it. Don't use the group stop. I'm going to get rid of it. Okay, so that's choosing your dynamic stops. Any questions about the dynamic stops? If any of these fall outside the stop of this, then it won't even touch that. Dynamic targets, I just want to jump to this part. It's under advanced trends. You got this set to true, then here's your dynamic target. You can set what's the minimum roadblock you want to set for a target. So it's saying it'll hit, once it hits a 2-column roadblock, it'll take you out. Now, most trades, and let me just move quickly to the 5 minute, and I'll move back. I want to show you something on dynamic stops. Our dynamic targets, here it is. Okay, so on this dynamic target, on the 5 minute trend, notice I have an extra setting. You can actually say how far you want to be in profit before looking for a roadblock to take you out. So dynamic targets, and most of the time this is the case. So you want 20 pips, and then take me out at the next 1-column roadblock. You could change it. You could change it to a 2 or 3-column roadblock. You can say after I'm up plus 20, take me out at the next 3-column roadblock. Okay, you could say that. but I think once you've got 20, then just taking me out at any level is fine. But if I can tell you, if you do 20 and then you do a 2-column roadblock, it could be 40, 50, 60 pips up to the next 2-column roadblock. So in the 1-minute trend, I don't have, it just has the roadblock. It doesn't tell you how much profit you need to be in first. I don't know if that's a mistake. I think I have it hard coded to 10 pips. Okay. Just because I was doing some trading, I figured you always want 10 pips. So I think because it's a smaller 1 minute, I think I've just got it hard coded at 10 pips in there. I'll double check. Basically, I used to have every setup had its own trade protector, every setup had its own scale out, every setup had its own trail stop. Now I've set up 3 programmable protectors, 3 programmable scale outs, 3 programmable trailing stops. So you can see there's 3 trade protectors, there's 3 scale outs, and there's 3 trail stops. So how do you use this? You just assign one of them to a setup. So I'll use trail stop 3 for the 1-minute trend. Well, what is trail stop 3? You got to go down to your trade managements and until you find them. Boom. So here's your scale outs, your trail stops, and your trade protectors. So scale out 3 or trail stop 3 is right here. And they're all the same default. You can change them. So you have 3 different ones. So this is plus 12 is this trailing stop. Once I'm up by 12, trail my position by 4 pips behind. So it'll be plus 8. If I go up to plus 13, it'll be plus 9. If I go up to 14, it'll be plus 10. That's how the trail stop's going to work. If it goes down, it won't move. So if the trail stop moves up to 10 and you're at 14, and then you're only up 13, you're only up 12, you're only up 11, then you're up 10, it'll take you out at the 10. So the trail stop only moves when you go up or down, whatever in the direction of the trade. So that's how you do this. And you can make these work together. Maybe you want to take half off if you're up 10. Okay, you take half off and then trail that other half by 4 pips. And you set this at plus 10, trail by 4 at plus 10, also take half off. So you can have these work together. And then you can do, I'll tell you, the trade protector is just a one-time stop move. So if you're up 10, you want to move it to plus 6, you did it. And that's it. That's all the trade protector is, a one-time move of the stop. It's just to protect a trade that's in profit. Maybe you don't want to trail. Maybe if it's up, you just want to get it to break even or up a few pips as soon as possible. And then you want the trade to work. You don't want to trail it. You just want the trade to go and keep yourself at a positive stop or a break-even stop so you don't lose anything on the trade. That's called the trade protector. Okay, you've got 3 of those to use. And you can use the same one for every setup. So I say you've got 3, but if you have Trade Protector 1 set up the way you like it, and you want every trade setup to use Trade Protector 1, then yeah, they can all use Trade Protector 1. So you have 3 different trade protectors, but every setup can use one of them. So you're not just limited to using it on 3 setups. In other words, you can use it on any. And then in the advanced settings, you can set your own time. These are GMT times. Say you don't want trends to be, say you get a signal, but you don't want to take the signal in the middle of the night. So you can put a limit on what times you want it. Here's your risk factor. 1-minute trends, they probably shouldn't even be 1. They should probably be 0.5. But this is a multiplier, so you can multiply by how heavy you want to go on this type of trade. So your power of 20 is going to calculate your risk size for you based on your risk. You just said, I want 20 pips to equal 2%. It will calculate what size that lot needs to be based on the currency pair, because every currency's pair is worth a little different, to get you 2 pips or 2% if you go 20 pips. So this risk factor, if it's a 1-minute trade, say I don't want a full 20 pips equals 2% on a 1-minute trade. That's a too high risk of a loss. So maybe for 1-minute trades, I do half size. So I can do 0.5. I can do maybe 0.5 is a better way, proper way to put it. I can even do a quarter of a size. I can do any decimal I want, as long as the lot can be calculated. So yeah, that's your risk factor. Your manual trades, maybe on your manual trades you want to have a higher risk factor because you're in total control and you're willing to take 3 or 4 pips on it. So maybe you have a style with your manual trades, how the alerts you want those to work out according to the VTA, the bigger targets and stuff. So maybe you'll go with the weighting that comes with the power of 20. But maybe on your trades, look, you're only looking for 5 quick ones, pretty heavy weighted trades. You can set the manual trade to be a risk factor of 1.5 or 2, and trade cautiously, and you can do it like that. Okay, so now this gets into the advanced settings, gets a little bit into how the grid looks before it gives you a signal. So this is saying we want our, okay, let's start here after the risk factor. We're saying for a 1 minute trend, I want at least 3 clear roads before it's going to give me an alert. So in this case, on dollar yen, I'm not going to get an alert because there's a roadblock. I mean, there's a car in front on each time frame. There needs to be 3 full lanes of 20 pips or more on each lane. I've got it set very restrictive. Okay, this won't give you many alerts this way, but the only ones it'll give me are the ones that actually have nothing in the way. So we won't get an alert for this because we don't have 3 clear roads above the price. So, and you can't do 4 because even the 1 minute, if it pulls back in the 1 minute box, the 1 minute boxes are in front of it. So you'll never, if you have 4, you're going to be out already in no man's land and you won't be up against anything. So 4 won't do. You won't get hardly any alerts for a 4 column here. But you can do, say, 2. I know a lot of people will just need 2. If you have 2 lanes that are clear of 10 pips or 20 pips or more, then I'll take an alert. I'll still decide whether I want to take it or not because that's the nature of the alert. You get a yes or no. But I at least want to see an alert if there's 2 free open lanes of 20 pips or more. Okay, and then also max pips to 5 minute box. So that means the distance from the 1 to the 5. If you've got more than 15 pips, I put it 15. Look, there's nothing wrong with that. It means it's a strong trend. But if you've got it too stretched out, that's your protection. Your 5 minute box is kind of your next level of protection. So just know the minimum stop you can probably have is down to the 5 minute box. So if it gets too far away, your stop, it's a very good likelihood it could pull back to that level. So I don't, if it's too stretched out, I'll just say, you know what, don't give me an alerts anymore. Doesn't mean they're not going to work. Often they do work. Sometimes they'll be so stretched out, all you see is a 1 minute box on the screen. All these things are so far back because the trend's been moving. And sure enough, it's just bouncing off the 1 minute box and just moving hundreds of pips. Okay, but you'll see with time, and you're trying to develop consistency, that a 1 minute trend is not where you're going to develop consistency. All right, they tend to pull back a lot. The 1 minute box, these boxes are flimsy compared to the other stronger time frames. I like to say, look, if you go in all in on a 1 minute box trade, it's kind of like taking all your valuables, all your glass vases and everything fragile and valuable, and just placing them on a wobbly table with all kinds of people walking around it. Right? You just know someone's going to bump that table and knock those things over, and everything's going to crash. And that's how I feel the 1 minute boxes are. They're just a real flimsy level of support. If you've got momentum, if the market is moving, you don't need much. I mean, if you take a big, those kids, they take the big, huge canvas ball and they roll it down a hill. If that thing's rolling down a hill and you're right next to it, I mean, you don't even really need to tap it, but you can barely tap it and you just keep that thing going, no problem. And that's what a 1 minute trend is like in momentum. You don't need much. You can get it on that 1 minute trend and it works. But as soon as that ball starts to lose momentum, those 1 minute boxes collapse so easy. And you can get caught. You can get caught out on the edge on a 1 minute trend. So once you know what you're doing, and honestly, that was my major complaint with our first trader we were with many years ago is that's all he traded, and it was ridiculous. Too many people were losing their butts, and he was experienced and could do it, but it was really hard to learn how to make a living on a 1 minute box. Okay, so I would say just treat them, just watch them, and don't do too much with those at the moment. But you can see here, if this gets too stretched out, that kind of stretches out where your protection is. So I like to keep them at 15 pips or less, the distance between this here. But remember, you can set it to whatever you want, and you can always reject alerts. You don't need to take every alert. So you can always make the settings a little less strict, and then you can make that decision yourself on whether you want to take the trade based on maybe 1 or 2 criteria maybe not being met. Say, hey, it's a nice looking trade. Everything looks good, but I don't have 3 clear lanes, or I don't have 2 clear lanes, or maybe it's not a full 20 pips back to the box. So some of these criteria you can maybe make less restrictive just to give you more alerts that you can decide on. So anything that you do, you got to try it for at least a couple weeks. I mean, at the minimum. I mean, most strategies you got to do it for longer than that. But anything you do before making any kind of judgment about anything, you gotta look at for a few weeks, a couple weeks. All right. So you know, even beautiful setups can fail, and so you can't say to yourself, "What was wrong with that? Everything looked right," because even successful setups are going to fail, 20% of the time. And if you can't manage your exits on those, they could take out a good percentage of winners. So you got to manage that. And if you want to make a living on the 1 minute trend, you're going to have to manage those drawdowns a lot better. So that's the thing about the 1 minute trends. I like doing trends starting from the 5 minute. Maximum white zone phase for entry. You guys have seen the white zone phases at the bottom of the charts. See this one here? You have to look. I do need to do something with the font, I think. But you can see that's a white zone phase 0. There. You can see it a little better there. 0. But basically, a white zone phase is how many times the white zone expands, how mature the trend is. Okay? So if it's a really mature trend, in other words, it's already been pumping out for a while, then you might stay away from it. So if you get to where your white zone phase, especially on a 1 minute, is entering white zone phase 2 or 3 on a 1 minute trend, it doesn't get much higher than that on a 1 minute. So you don't want to start taking trend trades when the white zone phase is around 2 or 3. It's probably already moved too much. So you want to keep the white zone phase, and 0 is not good either. You don't want to. So I have now I don't have a minimum on this, but you really don't want to take trend trades when the white zone phase is 0. Okay, 0 means it's pretty much consolidating. It could be at the point where you're switching from a downtrend to an uptrend, and it has to go from the positive white zone phase from the downtrend, say it's 3 or 4, as it consolidates, and it goes down to white zone phase 2, white zone phase 1, and white zone phase 0. But maybe that's just reversing to the upside, and it quickly goes to white zone phase 1 to the upside, 2, and then 3. That's a little different type of a white zone phase 0. But a normal white zone phase 0 is just the range is just ranging really tight in the middle. It's not moving one way or the other. You definitely don't want to take trend trades in that situation. Good job, Fred. Fred's making pips. Quickly then, and all the setups are pretty much the same for every trend, so I can just show you this and then quickly go through the 5 and 15, and then we'll kind of call it for the day. We've done clear lanes. We've got clear lane pips, 20 pips. You got to put that extra 0 on pips, by the way. We go to the maximum white zone phase, and we'll do a session on the white zone. Enable our dynamic targets, and then set our dynamic targets, and enable our dynamic stops. And then the L2 trail stop I haven't gone over. The L2 trail stop is good for trends. What it does is it uses the L2 as a stop, but not right away. Okay, it's an L2 trail stop. So, for example, all the other dynamic stops, if you use the L3, L4, L5, whatever, if you enter the trade, it maybe doesn't go profit, it just breaks one of those stops, it takes you out. The L2 trail stop works slightly different. The L2 trail stop works like this. The L2 does not become a stop loss until the L2 itself gets into positive territory. So, for example, let's find an example. Say we take a 5-minute trend on pound yen. Okay, look at pound yen, guys. Let me find my mouse. I can't find my mouse. My screen. There it is. Here's pound yen. Oh man, wait, that's a crossed box already. All right, I'm sorry. Let's look at dollar yen. Okay, so we're looking at dollar yen. So say we enter the 5-minute trend. Let's do a 15 because it's a little more spread out. Okay, so say we enter here, this nice little supreme combo, but we'll call it a 15-minute trend. Say we enter the 15-minute trend on dollar yen long, and we're using the L2 trail stop. Okay, now notice it's not part of your other stops. This is not your stop. This is just a feature. Okay, so your other stops are still your stop. The L2 trail stop happens when, say, initially you enter this trade here, and the price actually works out. It starts working out, and you're in positive. Eventually, this L2 will move up above your entry. If this trade is working, then L2 will move above your entry and into positive territory. At that point, once the L2 is in positive territory, L2 becomes a trailing stop. Okay, so it's really good if you're trying to capture longer moves, bigger moves. And then it'll take and because the L2 is a quick moving line, it'll move up quick. It's not a slow L7 line, it's fast. If you move up 10, 20 pips within a tick or two, that L2 is going to be up 5 or 10 pips. Okay, so it's a pretty fast mover. It's not as fast as the L1, but it will move fast. So it's not a bad little feature to keep true, and it will take you out at a pullback without having to use a trail stop, and it'll give you enough room to let the trade really take off. All right, so that's what the L2 trail stop is, and most of the trend trades have that functionality. All right, so what I'll do, that was the 1 minute trend. I'm going to quickly go through the 5 and 15 minute trends. They're almost identical, a few little separate settings. Any questions about that so far before I move on? Okay, I did forget to talk about one thing. My goodness. Okay, and a lot of you guys have asked how we use the stochastics and stuff, and you're about ready to see. So entry types, I forgot I did add a few more entry types. I've been busy. I don't just have the dynamic entry and the one-click entry. These other entries are sort of dynamic type entries, but I'll tell you. Okay, so real quickly, we know what the one-click entry is. You press buy or sell, you're in. You don't even get a chance to think about it. Dynamic entry, you press buy or sell, then it waits for a candle close that you've determined to enter you. And by the way, at any time, you can swipe a dynamic entry. So if you change your mind, you can swipe it and it erases it. It won't enter the trade. Breakout entry. Okay, this is different. Okay, for a trend. You don't get the best entry as far as price goes. Okay, but it is a workable strategy. I've put this on automateds, and it actually is pretty decent. What you do is you find your trend trade. Let's look at the let's look at a 15 minute, because it looks like we probably have some pretty good behavior on that one. Okay, so what a breakout entry does, let's talk about this. A one-click entry is, as soon as it hits the line, if it's an automated entry or not a manual, you'll get an alert right there. As soon as it hits the line, you enter. That's the one-click entry. You just enter when it hits the line. One-click entry. Dynamic entry, it hits the line, you click, and it waits till a candle is formed, and it breaks above it, and then it goes. A breakout entry, you enter, it clicks, and it waits for the high to be broken. It waits now. You're in a trend. It waits to break above the high. So you're actually in fresh highs. You know how when that happens, it can just take off really fast and you get really fast trades. Yes, there's such things as false breakouts, and those could happen too. But it is something worth giving a shot, the breakout entry. You're never going to be happy with your entry, though. I'm going to tell you right now. Especially because you think about it. If it works, you're going to probably have pulled the trigger about 10 or 15 pips before it enters. But when it enters, you're going to be out in fresh highs. So it's a different style, but it's actually quite workable. If you've got clear roads above, it's not bad. Okay, so that's the breakout entry. Now let me quickly show you the stochastic entry. That's this one. Okay, if you have a stochastic entry, then at the bottom there's a stochastic entry setting. You don't need to touch it, guys. I think it's set right where it needs to be. This is it. And I need to put a heading on it too. It's kind of combobulated with the trade protector. So that's the setting. It's 580 and 20. Honestly, unless you really know what you're doing with stochastics, leave it at that. That's a really good scalping setting. Okay, so that's what it is. That's an advanced setting. You don't really need to mess with it, like I said, unless you really understand the stochastic. Okay, so that's a stochastic entry. And so what happens in that case is, say we take the alert on the 1 minute trend with a stochastic entry, we accept the alert, then what it's going to do, you're in the pattern, it's going to enter, it won't enter until the stochastic in a long situation gets below the bottom line and then crosses up above the bottom line. So as soon as you cross up out of it, and actually I got to check the algorithm because I don't remember if I traded it, if I coded it to wait for the re-break of this bottom line, or if it just needs to cross over and the top line breaks it. So I mean, there's a nuance there, and I coded this a while back, so I have to go back and see exactly, and then I'll let you know when I figure it out. But basically, the entry then is based on the stochastic. So the trade setup isn't. The stochastic is just strictly the trigger. The stochastic has nothing to do with the actual trade setup. The stochastic by itself cannot tell you if there's a trade or not. There's no way, any strategy, any system whatsoever, that just looking at a stochastic by itself will tell you an accurate signal. It will not. But it is an excellent trigger if your strategy has already told you what direction to trade, and you have a general entry area, then the stochastic is a great way to trigger that entry. Okay, so that's how I use the stochastic. If I keep it at the bottom, so even on manual trades, if I like a trade setup, sometimes I'll just wait for the stochastic to get to its position before entering the pattern I want to enter. Okay, it's not a bad way to go. All right, as far as entering trades. Okay, I also have a whole strategy based just on the stochastic. It's called a stochastic trend. Okay, so that's the types of entries. You guys have a question about the entries? That I forgot to go over the different entries. So now we can go back to the 5-minute trend, and you can see everything's pretty much the same. Our entries, same types of entries. Emergency stops and targets. Dynamic stops, all the same. Just a reminder, don't use the group stop. I will get that out of there. It's not going to hurt you or nothing. I don't think it's effective. But you've got your same. You can assign your trade protector, skeleton, trail stops. You have a little more advanced settings here. If you decided to upgrade to the trend bot, you can actually turn on your trend bot here. You actually have a dynamic candle close option in the 5 and 15-minute trend because the 1-minute trend doesn't need it. It's only going to use the 1 minute. You still have your risk factor. You can still decide on clear lanes. Now for a 5-minute trend, you're never going to have 4 lanes because you're always going to have the 1 lane's always going to be congested. Always. Okay? And the 5-minute, if you want to pull back like right now, like I almost want to buy this. This obviously lane won't be clear if you're buying pullback. So the max you can really have is 2. Sometimes I can see you just doing 1 lane of 10 pips or more. All right, but hang on. This is a nice setup. It's just late in the day. It's just getting late. The 5-minute or the different trends here. All right, so we'll return the trends. We've done everything is pretty much the same. I think I left off with the trend bot, the candle close, the risk factor, the clear lanes. You can only really do 1 or 2 clear lanes on a 5-minute trend. Clear lane pips. How many pips of clear roads do you need on those lanes, on those 2 lanes that you've chosen? This is the minimum number of pips back up to the 1-minute box. Okay, so you don't want them too close because you don't want it to be a range. So you want there to be some, if you're entering a 5-minute box, you'd like to be some space back up to the 1-minute box. You actually want it to almost even be pulling back. In fact, if you get a 5-minute entry where the 1-minute box is way, way up high, that's good. That's a great thing. So the bigger distance you have between the 5 and the 1 on a 5-minute trend is great. On a 1-minute trend, not so much. Because on a 1-minute trend, if it's a big gap, that's your protection. But in a 5-minute trend, if you got a big gap up to the 1-minute box, that's your target. So I put 7 pips minimum, but I think 5 is probably more suitable. Probably okay. 5 is fine. And so it won't start looking for 5-minute trends until you have a 5-minute pip gap between the 1 and 5-minute box. Is what that is. All right, maximum white zone phase. You don't really want to go over a white zone phase 4 for a 5-minute. I mean, I've seen white zone phases go up to 5 and 6, especially when you get into the cryptocurrencies. And I'm not really speaking about the indices and the metals and stuff. This is strictly currencies. But I'd say on a 5-minute trend, a white zone 4, you're kind of pushing it. I wouldn't take any more trends after the 4th white zone expansion. Okay, and all this stuff, if you hear something I'm saying and you don't really know what it is, when you get into the trade room, this is when you ask the questions now. And maybe tomorrow, maybe you watch the video, maybe you think about it later. The trade room is a 24-hour forum to come in and ask questions. If I'm not here, hopefully somebody else will be that can answer, but I will be here eventually. I'm definitely making it my mission to be around a lot, guys. I'm definitely want you guys to be successful, and I want to create something positive and good, that people can come and make some money. All right, so if you have any questions, put them in the chat. This is require 1 minute white zone for entry. This is a cool trade, and you will get a lot of these types of trades. It does make the 5-minute trade more restrictive though, and you won't get a lot of alerts. But if you ever just got the trend bot and you wanted to test a certain strategy specifically, you could do these and just let it run on a demo, and then you could see what really works really good. White zone, what that means is when you take a 5-minute trade, let's see if I can find one. There's not a really good setup now. What that means is that, say this is a 5-minute trend and you're editing in the 5-minute box, that right next to the box there's a 1 minute white zone edge. Not this is a white zone, no, but the actual edge is the resistance and support. So if you have a white zone edge, like in this case it says 39, in this case it's this 30 number, lined up with a 5-minute box, that's what this is saying. Require that, because that happens a lot, and those do make very good entries. It's kind of like a supreme combo. You remember, a supreme combo is a 15-minute box, a 5-minute white zone edge, and a 1-minute L7. So a 5-minute trend with a 1-minute white zone in it is really just kind of scaling down a supreme combo. It'd almost like having an L7 on a tick chart if you had such a thing. Then you could do that. Then you would have a supreme combo on a 5-minute. If this stuff doesn't make sense, don't worry. I'm kind of saving it for the video. This is all for the video, so you can go back and watch this stuff over and over. And ask me questions in the trade room. Okay, enable dynamic targets, same as for all. Number of roadblocks and how many pips for the target. We've gone over that. Enable stochastic exit. Okay, this is different. So we talked about the stochastic entry, right? You can set the entry to be stochastic right here, right? And that's all fine and good. This also gives you an option for a stochastic exit, which, by the way, you don't have to use the stochastic entry to use the stochastic exit. You can use a one-click entry and still use a stochastic exit. And that just, excuse me, will take you out of the trade when the stochastic does the reverse of what it did for the entry. Sorry, I lost it for a second. What the stochastic exit does is, however you got in the trade is fine. But if you're long and that stochastic goes to an oversold position and then comes just out of that oversold position, it will exit you from the trade. If you're short and it goes, or I'm sorry, if you're long and it goes into the overbought position and then comes out, it'll get you out of the trade. If you're short and it goes into the oversold position while you're short, as soon as it pops out of that oversold position, it will exit you from that trade. So it's another dynamic way of exiting a trade when you feel like the trade has run out of gas. And the stochastic is a good indicator when a move is at least starting to run out of gas. So, for example, if you were to do a trend on a stochastic entry and have a stochastic exit, you could potentially get some pretty good moves. You can pretty much get the entire stochastic move on the chart. So, and you guys have seen what that can produce sometimes. So that is an option. You can set up your trends to exit or enter or both using stochastics. Here's something we haven't talked about, play defense. It's under the dynamic stops category. Almost every setup has a play defense. Okay. What that means is once you're in the trade, say you've entered a trade, and maybe the trade's taking a while, maybe the trade's not working out perfectly as you had hoped it would work out. Say, for example, you get into a trend trade. So you get into a 1-minute trend trade, and then while you're in the trade, the 1-minute boxes fall below the 5-minute boxes. And you're negative. You have to be negative to do that. Well, what playing defense does is when the pattern breaks down, it doesn't just take you out of the trade. Okay, it lets your stops work. You have a stop on the trade. You are willing to take the stop. It will let your stops work. However, if the pattern breaks down, the VT will enter play defense mode. And what that does is if your pattern is broken down and then the price decides to venture into positive territory, play defense will take you out in a positive situation, maybe +3, +4, +5, in a situation where you're in a trade that the pattern is broke down. Does that make sense? So if the pattern's broke down, it won't just take you out. Some people say, oh, hey, this crossed against, I'm getting out -8. I mean, you can do that if you want. But basically, what it will do is once the pattern breaks down, it will try to get you out at positive anyway. Okay, if it doesn't go positive, it'll just take you out at your stop. But that is an important feature, and I like it a lot. I can't tell you how many times I see in the experts tab playing defense, 5-minute trend exited +5, and then the thing just tanked. It would have been a definite -20. So it will get you out of a lot of bad situations. Okay, that's play defense. There's not a lot of settings for that. It's just on or it isn't. Okay, and if you don't trust it, you can set it off. But highlights help me out a lot. And then the enable trail to stop is the same for all the trends. So that's the 5-minute. Let's see, the 15-minute is almost, I want to say, identical to the 5-minute. I mean, everything, because they're so similar. Just know, if you want clear lanes on a 15-minute, you can only have one. So you can be 0 or 1. You can't have 2 or 3 clear lanes on a 15-minute trend just because of where you're at in the pattern. It's impossible. All right, so that's got to pretty much be at 1. Okay, and then this, you have a minimum and maximum white zone phase for entries, which you should have had probably on the 5-minute. You don't want to enter 5-minute trends or 15-minute trends when you have a white zone of 0. So you want to make sure your white zone phase is at least 1 on 15 and 5-minute trends. And I think that's it, guys. Require L7 for entry. That just pretty much means it's kind of like the 5-minute trend requiring a 1-minute white zone. Well, this is a 15-minute trend requiring an L7. But the cool thing is, for this condition, here I'm highlighting the wrong one. It's this one. It just means an L7 has to be somewhere in the level. So you have your 15-minute box. But if you have an L7 on the hour, on the 1-minute, or on the 5-minute, then this will work. Okay, this will work. So it's just beefing up your level with an L7, a nice strong L7 to beef it up in your entry level. Okay. In fact, I almost thought about putting that on every single trade, having just an option to make sure there's an L7 in your entry level. It would give you less alerts, but L7s are so good. Okay, traders, I think that's all I'm going to do today. Any questions at all about the trend setups or anything that we've talked about today? All right, guys, I'll tell you what, that's going to do it for me. This is Sam Shakespeare signing out.